Welcome to Wednesday's Market SITREP here at Top Gun Options. Matthew Buckley, call sign Whiz, one of the model portfolio managers here at TGO. And China actually off the turnbuckle actually reported better than expected GDP. The economy grew at 7.4% January through March quarter from a year earlier, and that beat forecasts. Okay, so the headline that people see is what? It beat forecasts. Well, other than that, Mrs. Lincoln, how was the play? China economic growth slows to an 18-month low in the first quarter. So not the best macroeconomic data out of China, and I would have expected the market to, especially with their industrial production. Look at their industrial production here, 8.8%, which was a big miss from forecast, and their fixed asset investment also a big miss. So retail sales better than expected, but I would have expected a bigger reaction in U.S. equities. One of the reasons why we're not seeing a bigger reaction in U.S. equities, and we're seeing this market have this kind of another rip your face off rally today, a couple reasons. We have the cap rate. 79.2 industrial production numbers came in pretty strong, and the chairwoman of the Fed, Janet Yellen, is speaking. So we're having this, we had a nearly 30-point swing in the S&P yesterday, and we're seeing something similar today. I mean, take a look at the just as I'm shooting this, I'm getting ready for a wealth creation with options live trading session. I mean, just incredible swings. We just keep melting up, right? There was good. Yahoo had some good earnings, and there were some other good earnings. But one of the reasons we saw a huge swing yesterday was because here we go. Here comes the Cold War again. So now we got a bunch of tanks with Russian flags on them in eastern Ukraine cities. So this is going to get a lot uglier as well, folks. But the market's kind of shrugging off any sort of bad news right now and melting up. We need to look at the canaries in the coal mine, though. Like the VIX, like the Baltic Dry Index that we talked about the other day. Triple-digit rally in the Dow, and we're only seeing the VIX down around 7%. Obviously, this almost looks inverse the S&P chart that I just showed you. Very, very interesting that the VIX isn't down a lot more. So this, to me, is one of those indicators that says, yeah, we're going up, but the market, this is kind of a hold your nose rally. Yeah, I'm going to bid the market up here, but I'm still a little creeped out, right? And I'm going to seek some protection. You should always be hedged in this market, whether it's a volatility hedge, an overall market hedge with SDS, or a gold. You should always have one hand on the ejection seat in this type of market, because things can swing around rapidly. Taking some losses in the weekly options model portfolio. I put on a repair trade earlier, about an hour and a half ago, selling the 1860, 1865 bear call spread, and of course we had this massive pop up through 1870. But starting to give a little bit of that back. But losing trade today. I was short the 1845, 1850 bear call spread, and that one's losing about $3,400. But Apple Iron Condor going right down the fairway, up $2,300 right now, and potentially getting 4,300 if it stays down the fairway by tomorrow's expiration. Remember, Good Friday, so the market's closed, so technically equity options are going to expire tomorrow afternoon. So hopefully this Apple trade is going to negate the loss on this XPX trade. Guys, I do not win them all. If you hear anybody say, hey, we're crushing it and knocking it out of the park and we win all the time, run as fast as you can, because it's physically impossible. The mission objective is to win about 60% of the time, because over time, that's a win. If you're swinging for the fences on every trade, you might hit a couple over the fence, but you're going to strike out more often than not. So we take our losses here at TGO and take our lumps, but I try and put repair trades on to either fix them or hopefully balance them out with other winning trades. Okay, so I got to run, getting ready for, like I said, a live trade brief. Fed Chairwoman Yellen is speaking, and I think that's also why the market got bid up. But there's also the Beige book coming out at 2. There's 3 types of books. Was it green? I forget the different colors. Green and blue book, and these are kind of, if the Beige book is classified. The green book is confidential, and the blue book is secret. So that's the real meat that we wish we had to look at. But we'll get the beige book at 2, and that might actually cause us to pull back a little bit if there's some hawkish talk in there about interest rates. But ever since the chairwoman came out, what was that? It seems like ages ago, and said, "Yeah, we're going to raise interest rates here after we get out of our quantitative easing mess." The market went full freak mode, and we went through a temper tantrum. So they're still doing damage control to fix that, but the damage control is what? Bizarro market. We just keep melting up, even if macroeconomic data aren't good. Okay, so keep, like I said, keep one eye on the exit, keep one hand on the ejection seat in case this thing turns, because as we've seen in the past couple weeks, markets go down a hell of a lot faster than they go up, and you don't want to be run over by the stampede. Okay, so I got to run. Happy hunting. Make sure you hedge, and I'll be back with tomorrow's Thursday SITREP. We'll see you.